Last time I walked through this section of North Bay Road in Miami Beach, this house that's right behind me is kind of like this mansion on the water. And I remember it was for sale, and I don't see a for sale sign out front anymore. Oh, in fact, I see the post is down, sitting over there. So let's see how much this one actually sold for, or if they did sell it. And since today, we're really gonna dive deep into property taxes and all of the craziness that's going on with that, and I have my own personal anecdotes to share in this video, guys. So lots of juicy details regarding property taxes, and I'm going to show you what these people are paying for property taxes and any of the other listings that we run across, because that's one thing I keep forgetting to include when we see some of these basically ridiculous listings here that are fetching tremendous prices. And people are always asking, what's the property tax bill on that? Well, you're going to be in for a huge surprise, because the property tax bills on these properties are insane. Well, ain't that something? Apparently this place is still for sale. I guess they decided to just knock down the real estate sign since they're asking ridiculous money here. They're actually asking $28 million. Place has been for sale for almost a year, and in a sinking market they decided it would be a good idea to raise the price by $2 million. So why not just knock down the real estate sign, because no one's going to come knocking at this door and looking at this place anyways. So I guess the logic here in this case kind of makes sense. Oh, and let's not forget about property taxes. Those are $177,000 per year, and as you guys can see, it is possible for property taxes to actually go down. On the contrary, some people think that it can't, but we can see here that it actually used to be higher in the years past. So property taxes can go down, but let's face it, when you're paying this much, does it really matter? Today I want to give you guys my own personal example of my property taxes going up and how that's going to affect my own mortgage payment. And trust me, I am not alone, guys. This is happening to a lot of people who bought over the past couple of years, because when you buy a property and you see the property tax bill of whatever the current owner is paying, well, that's what they're paying. That doesn't mean that's what you're going to be paying as the new owner, because once you purchase the property, it will be reassessed at a new value because you purchased the property at a higher price than the previous owner did. If you buy a property that the previous owner bought quite some time ago, like I did, then the property tax bill that they're paying would be significantly lower than what you're likely to pay. Now, full disclosure, I knew going into this when I bought my condo back at the beginning of 2022 that there would be an increase in property taxes. I already factored that in. I kind of did a rough calculation and I was pretty much right on the money. But look at how this affects your mortgage payment, because my mortgage payment prior to the property tax bill going up was $2,442 a month and 87 cents. And that includes your property taxes, your insurance, and your principal and interest, okay? Well, now, starting on May 1st, my new mortgage payment is going to be $3,044.41. That's a $601.54 difference and a 25% increase in just 1 year. Now, like I said, I knew this was going to happen. I was not blindsided by this, like many new home buyers probably are, because they don't take these things into consideration. And on top of that, guys, that's with a 4.125% interest rate. That's the interest rate I have on my loan. So it's definitely not the lowest like some people had, you know, in the low 3s or even the high 2s. It's not that low, but it's still a lot better than what people are getting today. And here's the other kicker. Since I own a condo, this does not include the HOA dues, all right? So going into this purchase, I knew the property taxes were going to go up. Now, the other thing that I knew about before we bought this condo was that there was going to be a special assessment passed basically right after we bought it, which was pretty crappy timing, to be honest, but there's just nothing you can do about those sort of things. And just a quick refresher for people who don't know this or you're new to my channel, the reason why I decided to buy this condo was because our lease was almost over where we were renting before, and the rent was basically set to double We were paying around $2,200 a month. We would have been paying around $4,000 a month, if not more, for a 2-bedroom, 2-bathroom rental that was comparable, okay? So buying became a very good option overnight because of all these increasing expenses. In fact, when we moved into our condo that we purchased, our payment was, like I said, the $24.42 a month plus $11.09 a month in maintenance fees, the HOA dues for the building, which came out to about $35.52 a month, which really wasn't bad compared to paying more than that for a rental for a smaller unit, because we bought a 3-bedroom, 3-bathroom condo. So it's a pretty big condo, you know, basically like a small house. And, you know, we would have been paying more than that to rent a smaller unit if we would have kept renting. So it made sense to just jump into buying, okay? But there was one surprise that we did not anticipate, and that was the actual maintenance fee itself going up as much as it did. Because we knew about the special assessment, we knew about the property tax increase, but we did not know that the maintenance fee was going to go from $11.09 per month up to $16.16 per month. And I'm just leaving off the cents here because it's $1,616.62 a month is the exact maintenance fee payment. And then on top of that, we have a special assessment of $428.43 for 5 years, which is a little over $22,000, I think, for 5 years. And when you add that all up, the maintenance fee is a little over $2,000 a month. So now our new monthly total that we're going to be paying for our condo starting on May 1st is going to be $5,089 a month and 46 cents. And it used to be $3,552.71. So for those of you keeping track, that is a 43.2% increase in the cost of ownership for this condo in just 1 year, guys, which is pretty much astonishing. And I don't know how many people are going to be blindsided by this, but I think it's going to be a lot. A lot of people are not prepared to handle increases like this. And you can easily see how this can become problematic for people, because say you go into your mortgage broker or your bank and you go to apply for a loan, just like we did and everybody else does, and they say, okay, you're approved for this much, and you buy a property. But that approval is based on all of today's figures, which is today's property insurance, which is today's property taxes, and things like that, today's HOA dues, which are all subject to go up. Those things never go down, let's be realistic, right? So you might be qualified to buy a property like this under those numbers, but maybe not necessarily qualified under the new numbers, which nobody knows what they're going to be. And you can easily see how people can get themselves in over their heads and not be able to afford this extra money, guys. We're talking $1,500 a month more than before in just 1 year. Now, luckily, we can afford the increase, okay? That's great. You know, we are not going to go into foreclosure or anything like that. My wife has a successful business, I have a successful business, and we're going to make it. However, if you have a fixed salary and you don't have the potential to always earn more income if you need to, well, you're in big trouble, especially with an increase like that. Now, I know what you're thinking, that a $5,000 a month house payment is insane, Michael. What are you doing? Get the hell out of there. Why are you guys paying so much money, right? I hear you, and I totally feel you. I mean, obviously, I'm the one paying for this. You know, my wife, we split this down the middle, so we pay half and half. Here's a couple things that I want to show you guys that have this make some sense, at least, that at least justifies all this for us, okay? And the first thing is, if you go on Zillow right now and you look at comparable rentals in my neighborhood for another 3-bedroom, 3-bathroom condo, you can easily see how we're making out ahead here. When you look at Zillow here, the cheapest rentals that are even remotely comparable to ours, as you see, start around the $7,000 a month range and go up from there. And here's the other thing. These two rentals right here I see at the beginning of this list are not on the beach. We are on the beach, on the ocean, with an ocean view. These condos don't even have that, and they're far more expensive than ours is, okay? And it just goes up from there, as you can see. So when you put it into that perspective, that if we wanted to rent a comparable unit, we would be paying at minimum $2,000 more per month to rent than it costs us to own this place. So that's the first thing that really makes it make a lot more sense for us to own it rather than rent. And besides the payment being significantly lower to own than to rent, there's another piece of this puzzle that comes along with this, which is kind of priceless if you ask me, and that is we don't have to move, okay? We're able to stay here for as long as we want. Because one thing I hate is moving, especially unexpectedly, which has happened to us a couple of times. It's a massive disruptor in life. It's very hard to get things done and to work on a regular schedule and just keep things moving when you have to pack and you have to look for a new place and you have to fill out applications and you have to figure out the logistics of moving from one place to the other, setting up the moves with the moving companies. It's a whole mess, you know? I mean, some people love it, I hate it, okay? So having the peace of mind of knowing that we won't have to move again unless we want to was also a big factor in this purchase. But as you can see, it ended up being a lot cheaper than renting.
Apparently this house has been on the market for 44 days. They haven't touched the price at all. It's still almost $3.3 million and doesn't actually have any listing history. So these guys must have owned this house for a very long time, further back than the MLS records go anyhow. But notice the property taxes, only $6,600 a year, guys. These guys are paying less in property tax than I'm paying on my condo that costs a fraction of what this house does. And that just goes to show you, if you bought a house a long time ago, especially here in Florida, and you have a homestead exemption, it keeps your property taxes way lower than somebody who's buying today, and this applies in a lot of other states too.
And the other factor to all of this, which is probably one of the biggest reasons why we decided to do this and get this place, is because my wife Lizzie, she has a successful business. She has a dog walking and dog sitting business, and it is crucial for her to be in the location that we're in order for her to continue with her business, because all of her clients live in the area. She walks around the area, you know, she picks up their dogs, she drops off their dogs, she walks them, etc. And she's able to do a lot of volume, a lot of business, because all of her clients are concentrated within just a few square blocks. And if she were to move somewhere outside this area, it would completely disrupt her business. So that was the other reason why we decided to make a purchase like this, and it's the other reason why we're still living here paying these ridiculous prices instead of moving somewhere else in Florida and paying a fraction of the cost, which honestly I would love to do that and just rent this condo out. As you can see, I could make a decent profit by renting it, considering what everybody else is charging for rent, and move somewhere else and turn it into an investment property. And that's something that we may very well do in the future, but it's not going to happen right now because she really enjoys what she does. Obviously, I'm here to support her in the sense that, if she's loving what she's doing and she wants to keep going, then I'm all for that. She also doesn't want to be fully dependent on me financially, and I can understand that too. This is not the 1950s anymore, and it just works. I will say it is kind of shocking to pay this much, considering before we were only paying like $2,200 a month in rent. But like I said, that was coming to an end, and there's no way we would have been able to find something else paying $2,200 a month, because that was the price that was locked in before all of the rental prices and real estate prices here in Miami started going berserk. And here's the other couple things that make me feel good about this. It's a $1,500 a month increase altogether, but we used to have a $550 a month car payment, which we don't have anymore, so the car's paid off. So that at least eliminates about a third of that, and that means we got to come up with an extra $1,000 a month out of pocket, which is doable. We can do it. Are we happy about it? No, it definitely sucks. That's 12 grand a year. The point is that we can do it. And the other thing I wanted to kind of touch on with this is that's with our lower interest rate, guys. Look at where interest rates are today and what people are gonna have to do in order to buy a home right now, okay? You're looking at close to a 6.5% rate for many people, if not more, depending on your credit score. They approve your loan based on your debt to income ratio and what your current income is and what the current property taxes are of the place you're looking at, what the current HOA dues are, if any, and then wham, you move into the property and a year later your expenses shoot through the roof. And this can happen to anyone, guys. Even if you don't have an HOA, let's say you buy a single family home, well, your property taxes are guaranteed to go up. That's going to happen, first of all. And the other thing that's very likely to happen, even if you're not in Florida, is your insurance is likely to go up tremendously as well. It's almost impossible right now to buy a property and think, okay, this is gonna be my monthly expenses for this property, and think that's gonna be it, okay? If you're basing whatever your current expenses are gonna be on the property and thinking that's gonna be the case in a year from now or 2 years from now, you're basically dreaming. It's not gonna be the case. And what I just outlined here, my own personal example, is proof of that. Many of you might be asking or wondering if I have buyer's remorse, if I wish we didn't go down this route and I wish we didn't buy this place. And the short answer is no, because of what I already explained, especially when it comes to the rental prices. Now, could we be saving a little bit if we were renting for a 2-bedroom place for $4 grand a month, saving that extra $1,000? Yes, but at the same time, it was time for an upgrade. Okay, it was time for more space. I have my own office. She has her own office now where she can, take care of all the dogs. And it really works out much better than our old living situation. I didn't have an office before, had to work out of the living room. And the guest room was kind of shared with her office where she takes care of all the dogs, and it was just not that great. It wasn't that functional, Even though it costs more, it definitely has been an improvement in quality of life. So at least I feel like I'm getting something for it. Now, if that wasn't the case and I felt like, it was a downgrade in some ways and it costs more and the only thing I have in return is being a homeowner, then yes, I would probably have buyer's remorse. But because of what I just told you, I don't. And I'm being totally transparent with you guys here because I think it's important for everyone to hear stories like this. And now you've heard mine and the most recent update on it, and it helps you from making similar mistakes. And not that I made any sort of mistake here, but the mistake that could easily be made is thinking that the budget that you're setting for your housing payment as of qualification time is going to be the same in a year or 2 years from now, which is very likely not to be the case. So that's the biggest pitfall you need to look at right now if you're going to be buying something this year or in the near future. And this is also why I think people that might be looking at buying a condo in Florida particularly, maybe you want to wait until like the middle of 2025 once the hammer has dropped for these new condo laws that will be in full force by then for about 6 months. And you're going to see how many buildings are going to be able to withstand this massive increase that a lot of people are looking at and which ones will not. And that's the other thing I wanted to mention from this. This special assessment that I have to pay is going towards this whole Surfside collapse and all the new rules and stuff that we're going to have to comply with. So, the building has like a $3.5 million assessment, guys, for the entire building to make sure everything is in tip-top shape, and we're just kind of getting ahead of it. Even though it's not a requirement yet, we're getting ahead of it now before being forced into it at the last minute, and everyone's scrambling for contractors and trying to get all the same work done all at once, which I think is smart on behalf of our board to do that. So as much as it sucks, it's good to be ahead of the curve because that's kind of how I think with things as well. But if you think that's bad, it can get so much worse, because one of my viewers who wishes to be remaining anonymous lives in Turnberry Towers, okay, which is a building in Aventura in Miami. And if you think whatever I just told you is insane, it is so much worse there. And that also makes me feel pretty good about our situation. He lives in a 2-bedroom there, and he's renting. He's not an owner. But the owner pays about $1,200 a month in HOA fees. In order to get this building up to par and to actually bring it up to all the new codes that they're gonna have to soon, they're gonna have a $30 to $35 million special assessment. And that's gonna run each owner in the neighborhood of about $100,000 per unit, guys. And that's not even the worst that I've heard. I've actually heard of worse and higher assessments than that, but it's definitely one of the worst ones, that's for sure. And here's the breakdown that he gave me. The current owner's paying $1,200 a month in maintenance fees for this place. Well, it could end up being $1,800 a month for the HOA fee to go up once they start factoring in the reserves that they're gonna be required to have in 2025, and an additional $800 to $1,000 a month special assessment for, get this, anywhere between 10 to 15 years. They don't even know yet. So imagine having an extra $800 to $1,000 a month special assessment, basically the life of a shorter mortgage. That is insanity, guys. And this is why I'm telling you, you're likely to see a lot of these condos come on the market over the next couple of years, once people start really feeling the full pain from all of this, which is not going to be until the beginning of 2025. Even in our building, I think there could be some slight increases from where we're at right now, but we already have partial reserves, and like I said, the special assessment's already in place to cover all the things that need to be done to get the building to, fully pass the inspections that we need to. So if there are any increases from here on out, it's either going to be from higher insurance, or it's going to be just from increasing the partial reserves to full reserves. So hopefully the increases moving forward are going to be a lot smaller than what we went over earlier in this video. And it's not like you're just immune to this if you're a renter either, guys, because he told me that he was paying $2,300 a month for this 2-bedroom, which is a fantastic deal in a building like that in Aventura. And recently the rent payment went up to $3,000 a month. So that's still a $700 a month increase. So it's not like renting automatically puts you in this magical position where you're immune from all these increases, because you're just not, guys. When landlords get these massive increases, they're gonna raise your rent. And here's the kicker. He's gonna have to pay more in rent, this $3,000 a month, and this doesn't even include yet all these new HOA fees and the special assessment that this owner is gonna have to pay soon, because all that hasn't kicked in yet. But once it does, they're very likely to raise his rent even further. Now we also know that Miami has been in the news over the past couple of years as basically taking the #1 spot for the amount of appreciation in home prices here over the past several years, and it still is the #1 spot as of the most recent data. But I want to show you guys the most recent monthly statistics that we get from the Miami Association of Realtors to show you just how much things are slowing down here compared to how it was before. Because even places like this that are one of the strongest markets in the entire country are getting hit big time right now that interest rates are higher and inflation has really started taking a toll on people's monthly budgets. When we look at single family homes here, you can see the sales volume is down 27.8% year over year. The amount of listings paid in cash is down. The median sale price, however, is still slightly up at 3.5%. Just barely, it's up. But I think that probably by next year could be the year when we see this year-over-year number potentially go negative in Miami. And a lot of places, it's already gone negative. The dollar volume, meaning the amount of money flowing into real estate here, is down by almost 27%. People are not paying full list price anymore. They're paying 99% of the listing price, down to 95%. It's taking much longer to get a contract, 84% longer to be exact. It's also taking longer to close on these deals. And the active inventory is up by 63%, which is a huge jump as well. and you also have the month supply of inventory up 123%. So as you can see, this is just the house market so far. Things are moving in the right direction for buyers right now, but it's still definitely not a great time to buy. Now let's look at condos. Now condo sales are taking an even bigger hit. As you can see here, they're down by 46.6%, and this is likely due to all these new laws that are going to be going into effect soon, and a lot of buildings have already seen substantial increases in HOA fees as of the beginning of this year. The amount paid in cash is actually up 5%, so that's not bad, I guess. Median sale price still up year over year, but not by much, guys, 2.6%. And the dollar volume flowing into condos is down by 49%, which is substantial. People are not getting the full listing price anymore. They're getting 96% of the original listing price. The median time to contract is also up 18%. Median time to sale is about the same. Active inventory, though, is up 26.4%, and the month supply of inventory is up 73% to 4.5 months. Now remember, anything that's 6 months or above is considered a balanced market at 6 months, and anything above 6 months is now considered a buyer's market, which is why I'm telling people to just hang on. Even for the houses, guys, it's not quite as high as the condos at 3.8 months of inventory, but it's all creeping up. It's a lot higher than it was a year ago, and things are going to continue to move in this direction as we get deeper into the recession, as people can't afford things with inflation. And let's face it, as more property owners get blindsided by these tremendous increases in costs of ownership, right? I'm definitely not going to tell anyone, oh, you should not buy. I mean, you can do whatever you want, guys. In fact, if you do buy, I hope you use my link in the description below, because I can set you up with a real estate agent nationwide, whether you want to buy or sell a property, and it's a free service to you. So use that if you are going to be in the market this year. It helps the channel, it helps you. And it's still not a bad time to be a seller, especially if you bought more than a couple of years ago. You're still up tremendously. Even me, you know, purchasing at the beginning of 2022, I could sell my condo now for significantly more than I paid for it, but I'm not doing that because we need the place to live and all the other reasons I already explained. But I could sell it right now if I wanted to and walk away with a hefty profit and move somewhere a lot cheaper and just live a way more modest lifestyle in terms of, you know, the monthly house payment. And maybe that day will come, but we're not ready for that yet. But I'm putting these things out there and giving you guys the real deal, the real data, the real things that are really happening to people. It's like sometimes people think I'm talking about all this stuff in the videos as if this is all just make-believe and made-up stories. This is my own personal anecdote, guys, that I'm sharing with you guys in order to give you the lowdown on how this could play out in the real world if you're looking at buying right now. So if you are going to be someone doing this, just know what you're up against, because there are a lot of things that can change your monthly budget that you are not expecting right now. And in a shaky economy with bank failures and the layoffs starting to tick up, I just think it's dangerous. And to be honest, if you want lower prices, the best way for that to happen is not buy. So there's that. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.